You know, if you're a trader, you're always on the hunt for that one strategy, the one that's not just a little profitable, but actually life-changing. Well, today we're diving into a model that makes that exact claim. It's a system its creator says is so powerful, it could literally set you up for life.
And look, this isn't just hype. The trader behind this whole thing, he goes by TG Capital or Tyler, dropped this bombshell. We're talking about making $50,000 on a single trade, risking just $1,000. That's a 1 to 50 return. A claim like that, yeah, that makes you sit up and pay attention.
But the massive reward is only half of it. The other half is this number, and it's almost hard to believe, a 90% win rate. Now hang on, high reward and high win rate? Most traders will tell you that's impossible, that you can't have both at the same time. This model claims it does just that. So how on earth is that even possible?
Okay, so to really get our heads around this, here's how we're going to break it down. We'll look at the incredible promise behind it, the super strict pre-trade checklist, how to actually spot the Trident signal, the rules for getting into the trade, and then the big one, the trade-off between those huge payouts and the patience required.
So this strategy didn't just pop up overnight. Tyler talks about taking a whole year off from trading with prop firms, the companies that fund traders, because he was struggling. He spent that entire year just obsessively backtesting and tweaking this one single setup until he said it was bulletproof. And when he came back, he put his money where his mouth was, passed every challenge he took, and apparently pulled in nearly $400,000 in just 3 months.
And this quote, this gets to the real core of it. The secret sauce isn't some crazy complex indicator nobody's heard of. According to Tyler, it all comes down to a level of patience that, let's be honest, most traders just don't have. It's about waiting for that one perfect A-plus setup and just ignoring everything else.
All right, before we even dream of looking at a chart pattern, the system has a set of really strict, hard and fast rules. And these aren't just suggestions, okay? They're mandatory. You have to meet these conditions to create that high probability environment where this whole thing can actually work.
The entire foundation is built on these 4 super specific rules. First, you're only even thinking about trades during the London session, and only in a tight 3.5-hour window. Second, all entries are found on the 30-minute chart, period. Keeps things clean and simple. Third, you absolutely must be trading with the daily trend. So for longs, price has to be trading above the 200 EMA. And finally, the model is built to go long. It's biased towards buying, especially on things like gold or the Nasdaq that naturally want to go up.
Okay, now for the really technical part, the Trident signal itself. This is where all those pre-trade rules come together to pinpoint a super precise entry point.
The first thing you need to see visually is momentum. You've got the 5, 9, 13, and 21 period EMAs, and they need to be stacked up perfectly, in order, fanning out like a beautiful wave. If they're all tangled up and crossing over each other, forget it. That's a low probability mess, and you just stay away. This stacking tells you the big money, the market itself, already wants to go higher.
Now, the place we're aiming for, the target for our entry, is what's called a fair value gap, or FVG. Just think of it as a little imbalance in price, a small gap that the market leaves behind. The market almost always wants to come back and fill these little gaps. And that's the sweet spot, the centerpiece of this entire setup. And here's where the magic really happens. After that fair value gap forms, you're looking for a very specific candle to show up, a doji. It kind of looks like a plus sign, and it signals that the market is undecided. But here's the key. The wick of that doji has to dip down into the fair value gap. It's like sellers tried to push the price down into that zone, but they just couldn't make it stick.
And here it is, the final, absolutely critical trigger. The very next candle, the one right after the doji, has to close below the high point of that doji. If it closes above it, the whole thing is off. The setup is invalid. It's this tiny little detail that Tyler says is responsible for that crazy high win rate. Once you get that confirmation close, it's game on.
So the signal's confirmed, all the conditions are met. Now what? How do you actually manage the trade? Well, the risk and reward rules are just as specific as the entry signal.
What's interesting is that the risk management isn't one size fits all. It's actually tailored to what you're trading. For most US dollar pairs, it's a super tight 10-pip hard stop loss right below the low of the setup. But for something really volatile like gold, there's no hard stop.
Instead, the trade is only off if a full 30-minute candle closes below the low. This is all to avoid getting kicked out of a good trade by a quick, meaningless price spike, which happens all the time with gold.
And now, the reward. The absolute rock-bottom minimum target for any trade you take with this model is a 1 to 20 risk-to-reward ratio. Let me say that again. For every single dollar you risk, you are aiming for at least $20 in profit. This is how just 1 or 2 trades a year can have a massive, massive impact on your account. Okay, let's be real. A 90% win rate, a 1 to 20 minimum target, it sounds almost too good to be true, right? So what's the catch? Well, as you'd probably guess, getting these kinds of results means making some pretty major sacrifices.
And this slide right here, it just lays it all out. The contrast is just wow. On one side, you've got these incredible pros, the high win rate, insane risk to reward, tight stops. But then you look at the cons, and they are just as extreme. You need almost superhuman patience because these perfect setups only happen maybe 8 to 15 times a year for each asset. You're also stuck in a really tough trading window, and you have to be mentally okay with watching your P&L swing like crazy while you let these trades run.
So let's just boil this all down. What's the bottom line? This is not a daily income strategy. This is a wealth-building strategy. It's about a few high-impact home runs, not a bunch of base hits. Your success with this has way more to do with your mindset than your charting skills. And this is a big one, because you have to let trades run for so long. It's pretty much only viable with specific prop firms that use what's called balance-based drawdown, so your unrealized profits don't count against you.
So, in the end, the Trident model is this fascinating puzzle. The system itself, it's mechanical, it's clear, but the demands it puts on you, the trader, are almost entirely psychological. The data suggests the edge is real, but it all comes down to a really important question you have to ask yourself. The strategy might have a 90% win rate, but do you have the 100% patience it takes to actually pull it off?